Hello everybody and welcome to this week's Motor Trade Radio podcast, brought to you in association with eBay Motors Group. It is Saturday the 26th of June and you're joined by myself, Philip Nothard.
And me, Curtis Hutchinson. So this is episode 34, season 7 of Motor Trade Radio, bringing you all the chatter that matters. And once again, we've gathered together this week's big car retailing stories across the franchised and independent sectors for you to enjoy all in one place, on demand, on your podcast feed.
Halfway through the year now, Curtis.
Yeah, I know.
End of June is within days now, and that's it. We're in the second half of 2021. I mean, how fast has that gone?
I know. This week we've had the summer solstice. Next week we've got Wimbledon. So, it's all on fast forward now, isn't it?
A bit of a shout out, because one of our stories this week from Marshalls, they actually sent it into the podcast, didn't they, early when that press release was published. So, a big shout out to Marshalls for doing that. And if you do have anything that you want us to talk about on the show, or you want to join and come in and come on the show and be interviewed and have a chat with Curtis and I, then please do get in touch and contact us either directly through Twitter or LinkedIn or directly through any of our social channels with Curtis and myself, or via the email address, which is motortraderadio@yahoo.com. And come and share some of your stories, what you're doing, what's happening, some of your experiences, etc. You're welcome on any time.
Yeah, definitely. And also, if you've got any views on any of the stories that we cover this week or future weeks, then let us know what you think. It'd be good to get some feedback from you guys on what we're talking about and the big stories. So this week, we actually recorded a really good interview, didn't we?
Fantastic.
I'm really looking forward to actually listening to this one. But it's with Andy Barratt, who is the former MD of Ford of Britain. So he ran Ford of Britain up until October-November time last year. And now he's running the distribution and retailing of Lexus and Toyota for the Al Futtaim Group in the United Arab Emirates.
I mean, fantastic interview that. We're looking to get that published on Wednesday morning, so do look out for that one, where we'll send you a few sort of a bit of a teaser early next week. But a fascinating interview there. If you're in the industry, you will know exactly who Andy Barratt is. A legend of the sector, but actually very, very prolific in the social media world as well.
Yes.
And very open. I think he, without sharing too much from the interview, he was actually really looking forward to coming on the podcast. He's an avid listener to the podcast, and he was really excited to come on and really just wanted to chat for best part of an hour with us, didn't he?
Yes, yeah. And we'll have an extract from that interview later in the show. But, as you say, Phil, look out for the full interview, which we'll probably upload on Wednesday morning.
We will. So this week, before we look at the headlines, we'll start with our monthly chat with Derren Martin, head of valuations at CAP HPI. And he'll be taking us through some of the June trends, what the first half of the year has been looking like, and try and get his crystal ball out, more importantly, of what the next quarter looks like from a valuations perspective.
Derren, welcome back to the podcast for your monthly update on used car values. Can we just start by taking a sneak preview of CAP HPI's June values, which are published on Monday? We know they've been rising since March and hit 6.7% in May. What are the headline figures for this month?
Yeah, hi Curtis, thanks for having me back on. So live valuations during June for July's monthly customers, for people who still take monthly, we've seen further increases off the back of that 6.7% last month. This month, the headline figure at 3 years, 60,000 miles is 4.8%, which is equivalent to about £625. So I've said that in quite a blasé way, but it's absolutely astonishing, the increases that are still happening and that have happened over the last few weeks, off the back of 6.7% to then have 4.8%. And prior to that 6.7, we had a 2% increase. So it's around 13.5% in such a short period of time, in sort of 90 days. It's absolutely unbelievable, bearing in mind that values would normally be dropping.
I mean, that puts you year to date at 9.3, doesn't it, with the slight easing in the first quarter. So, I mean, that's a significantly high position to be for the time of year.
I think we've said it on this call before, but seasonality has kind of gone out the window, and all of our graphs showing the progression of values over the years. This year is just completely different, with this upward curve as opposed to what is normally a downward curve. So yeah, it's been quite amazing, really, what's been happening, and those increases over the 3 months, equivalent to around £1,700 on a 3-year-old vehicle. Which is around £2,500 on a 1-year-old vehicle. So that's on average. So obviously you've got many that have gone up by much more than that. So it is really, really crazy times that we're seeing.
And when we spoke to you last month, Derren, it was tracking at 6.7% when you closed for the month.
We did see probably I wouldn't say a dip, but maybe a stabilisation during sort of the half-term week. Weather was good. And there was maybe a slight stabilising then, but then it just carried back on the week after when consumer demand sort of kicked off again. Yeah. And there's been no sort of impact of the Euros or of any decent weather or anything like that. It's really just been continuing. I would say it's been steadier during June. You haven't seen sort of when it really lifted through the roof in May at certain times. It's been that sort of 4.8% has been steadily getting arrived at throughout the month. So it's just been prices just continuing to go up as retailers are seeking stock to replenish their forecourts.
And in terms of sort of strength and weakness, if there is any weakness in terms of segments, what has stood out in terms of rises, and is there any sort of weakness in any of the age profiles?
Well, the only movement down is at 10 years plus. So the older stuff is not doing so well. We put that down to a lot of the cars that are in the wholesale market are probably not in such a good condition because a lot of retailers are keeping hold of part exchanges that come in and retailing them. So they're not sending them to the trade. So we're not necessarily sort of seeing that within the trade data. So cars that are going through are not selling for quite as much, but even that weakness is very, very minor, only 0.7%, which on a 10-year-old vehicle is certainly not much in pound note terms. Across the sectors, I mean, almost all of them are very, very similar. All of the mainstream sectors, as we call them, are all above 4% increases. So you've got Super Mini up 5%, City Cars up 4.4%. Lower medium, which is C sector, up 5.2, MPVs up 5.2. So it's across the board, really, those increases. Convertibles up again. They've been just rising ridiculously for almost a year, with a slight dip over winter, but only a slight dip. Maybe not quite so strong are the luxury exec and supercar sectors, but they're more reliant on sort of what happens in retail, and they probably don't find their way to trade much nowadays anyway. Looking at fuel types, it's a recovery from hybrids, where they've gone up by, so plug-in hybrids up 5.1%, petrol up 5%, and diesel up 4.5%, and pure hybrids up 5.3%. So they're very, very similar, whereas over the past year it's been hybrids that have struggled, but now they're on a recovery. They maybe look more reasonable value, and also in times of shortage, the dealers are buying them and taking a bit more of a risk on them on the forecourts. Electric vehicles haven't gone up quite so much, but even they've gone up by 1.8%.
And Derren, as you say, it's the fourth consecutive month of rises. What are you noticing in terms of that time lag between wholesale values and retail prices, and are dealers standing firm on their prices?
I think it's a real mixed picture out there in the retail world. There are retailers that have pushed their prices up. There are the switched on ones that have pushed up prices even on cars they've had in stock for a long time. that they haven't sold, but they've taken a bit of a risk and pushed the prices up of that, and that's worked for them. So, but there are others that haven't pushed their prices up, and maybe some of that is some of the smaller independents that aren't so data rich, that are still working in their maybe traditional ways. So it is really, really mixed. I think it's very difficult to sort of price vehicles based off that retail world, and especially look at how much you'll pay for cars based off those retail prices, because I think what they're finding is that they're selling a car at a price that they set previously off what they paid for it a few weeks or months ago, and then going to try and replenish stock and realizing that they can't replenish them almost for the retail values because they've gone up by so much. So it is a very, very mixed picture out there, and I think trade values are king at the moment, so that you can judge what you should be paying in the trade market for cars to replenish.
Yeah.
So I think, thinking about, obviously we're now at the half year point. The year to date is 9.3% up if you're including the sort of the first quarter, and obviously through to that strength of 13.5% over the last 3 months. What is your take on the trends over the sort of the last 6 months that you've seen? Because we've gone through, coming into the new year, out of through a lockdown period, then we've had this sort of pent up, or this reopening of showrooms, but then we've been hit by the challenges in the new vehicle market through supply, through semiconductors and other challenges that they're facing. What would your sort of key takeaways be for that first 6 months of the year?
Well, I think it's been a very different year for obvious reasons. The first 2 or 3 months values were dropping because we were in lockdown. All of sort of the business was purely online. No one was allowed to go and visit a car showroom. So generally, though, that's the best quarter of the year for prices. They usually go up. It's a very buoyant period. Certainly the first 2 months of the year, January, February, are usually really good. They were weaker this year, but as soon as we came out of lockdown, it was buoyant, really buoyant for retailers. Queues out the door sometimes, obviously with social distancing, they're not allowing so many people in the showrooms, and it was really, really busy. The semiconductor issue, I think it was talked about during April and May, but I don't think we were seeing the full impact of it. And I think shortages are going to come over the next three or 4 months still. I think it's going to hit harder. And I've always kind of said that. I think what's happened with pricing in the used car market has not necessarily been due to semiconductor shortages. It's been due to plants that have had to close, plants that haven't been on full production, and sort of almost, I don't want to use the phrase panic buying, but there's certainly some concern over what comes next, and that's why there's been high prices paid. Stock levels are lower out there than they traditionally would be, but conversion rates are quite high, and we're seeing more data, more sold data than at this time in 2019, which was obviously a normal year. So it's been a really unusual 6 months, and I think there's more unusual things that will happen. Every month seems to be something that we weren't quite expecting, and I do think that the semiconductor shortages will hit harder over the next few weeks and months.
And finally, Derren, it's crystal ball gazing time. How do you expect values to perform over the coming weeks, the coming months, and when do you anticipate it slowing down?
We won't hold you to this. We're just recording it down, so.
Yeah, I think I used this phrase last month. I think we're in for a summer of strength. I should copyright that phrase, but I think yes. There's going to be values can't keep increasing as they are. We're getting some values over list, new car list, some very close to new car list, and we've got a new plate coming in September. How much more is a car registered in September going to be worth over one that was registered in March if prices are already above new car list? I think that's going to have a bit of an impact. So I don't think they can keep going up to the same degree, but I think they can stay strong. And I think they will stay strong certainly throughout the summer, would be my prediction. And once we get into Q4, you might get back to a bit more normal seasonality. I think new car supply will improve around that time, which could mean more supply in the market. But we're not predicting any big sort of dramatic drop in single months. I think you might get some seasonality in Q4 when values drop, but I don't think you're going to get a big sort of drop off a cliff scenario. So I would say it's going to be okay for a while, and that retailers should continue to buy in the trade. And I don't think they're going to catch a cold at the moment. But obviously, you've got to be very careful because when it does turn, you don't want to be left holding stock that you bought at previous high prices. But I honestly don't think that there is going to be a big drop off coming.
Do you remember the year of the used car?
Yeah, 2018. Yeah.
Yes.
that was a comment as well, wasn't it? I think we were together at that point. I think that you predicted that it was going to be the year of the used car. So it certainly did turn out to be that, and ever since, hasn't it? To be fair, if we think back now through sort of 2019 and today,
it's been strong for a number of years. 2019 probably the weakest of those of the most recent years in value terms, but that was off the back of a strong 2018. But to put that into context, values went up by about 2% in 2018. So we're going to massively outdo that year. So yeah, really unusual times, and it's obviously, I guess, a little bit disconcerting when this type of thing happens, because a lot of retailers asking us about how long it's going to last for, and are those prices really what they should be paying. So it is really unusual at the moment.
And it is a bit. I mean, as you say, it's seasonality is a little bit out the window now. There's talks that stock in terms of new market is still going to continue into 2022, which won't necessarily release used cars in any time soon, will it, into the market? We're still looking at activity. We're still looking at potential extensions to the lockdown, and further lockdowns are being discussed maybe more locally. So I think anytime soon, I think there is still a very strong, or at least stable, used car market in the short term to medium term, isn't it?
Yeah, you've got things like holidays. Are they going to happen? Are people going to divert funds towards things like that? But I think even if they do open up more countries onto the green list, I think that you're still going to get less people going abroad, which means more people with money in their pocket, and more people looking to buy cars with their savings that they've made over the last year or so. So I'd certainly think that consumer demand is going to stay strong. Might dip off a little bit, as it tends to do over the summer, but if you want to buy a car and you can't get a new one, it's going to make the used car market strong again. So for those reasons, I think we're in for a good few months still.
Definitely. Well, I mean, all it means to say is thanks again for joining us on the podcast. As you know, you're welcome on any time. We'll definitely be back again next month. But if there is anything in the meantime you want to come on and talk about, then do reach out, Derren. You're more than welcome. So
yeah, it's a pleasure, and always welcome. Always happy to come on and let you know what we're seeing in the market.
Excellent. Well, look after yourself, and we'll look forward to catching up at least at the end of next month, if not sooner, and we'll keep a close eye as to what's happening in the meantime.
Yeah. Okay, cool. Cheers.
Thanks a lot, Derren. So some great insight there from Derren, and as we always say, he's welcome back next month to talk about how the market is progressing. So getting back to the show, this week's headlines are from AM Online, Motor Trader, Car Dealer, and This Is Money. And we'll start with Marshall Hand's 4,000 staff 2020 loyalty bonus and backdated pay review. Disruptors face real problem with supply shortages, says Truss Ford boss. Dealers risk losing referrals from online customers, warns Judge Service. The agency model is on the radar for Nissan. The used market sees growth in demand for hybrids. And finally, this week, one for regular listeners, we've actually found someone who will convert a Hillman Imp into an EV. but we might need to crowdfund it to actually see our dreams come true.
Yes, yeah. I mean, it's not the cheapest way of doing things, but yeah, we'll talk about that one later, won't we?
We will indeed. So we'll start with car dealer, and the headline there is Marshall Motor Group hands out one-off bonus and a pay review to 4,000 employees. So this got a lot of attention during the week. So it's, as I say, the latest from Marshall. So the dealer group has said that its employees will receive a bonus, which will be the equivalent to 1% of their basic salary, capped at £500, with nobody receiving less than £200, and also company directors will be excluded from the bonus payment.
Yeah, and this is on the back of the payback for the furlough money to the government as well, which I think from memory is 4 million that was paid back there, and there is an interview that we did with Dash. Not so long back now. It seems a long time ago, but actually it's only a matter of weeks ago when he was mid-moving house. Yes. He gave us the time, and if you haven't listened to that, then please do go back and have a listen to that one. And as we say, Dash sent this press release into us when it went live. But again, sort of leading the charge on looking after his staff, doing the right thing. You can see why he is so recommended in that employer of the year award that he continues to sort of lead there. So great work by these guys again.
Yeah, and part of the story actually goes into the pay review. So it's implementing a pay review with up to 4% increases backdated to May the 1st, 2021.
Yeah, and again, a great move, and they've got their, in terms of what's happening with the profitability of the business, the payback, the bonuses, etc. And there's a statement there from the HR director, Joe Moxon, who said that Marshall is a fantastic team and extremely privileged and proud to work alongside them. People are at the heart of our business, and creating a positive working environment and culture for every colleague has a huge positive impact on our business, and it seems to do so, doesn't it?
It does, yeah, and it's worth adding that only in April, Marshall was ranked in the Great Place to Work UK listings for the 7th year running, which I know is something very close to Dash's heart there, and what a great recommendation for the group. And
remaining with CEOs, and a very short but very on point message in the next story, and this is over to motortrader.com, and disruptors face real problem with supply shortages, and this is something we've been talking about, something that Derren's mentioned in terms of that supply shortages for the in the valuation market. But this comes from Trust Ford CEO Stuart Fold, and again, fantastic interview we did that time with Stuart on the podcast, but very on point with his opinion at the minute.
Yeah, very much so. And this is probably one of my favourite stories from the week, because there's some great quotes in here from Stuart. He says in many ways the disruptors who have come into the market have a real problem on their hands trying to find stock. And he goes on to say the majority of the dealer groups have closed the door to them, retaining their stock and taking advantage of this rising market. But the quote that I really do like the most is, any dealer selling stock to them, frankly, must be crazy given the current situation and the fact they're trying to eat our lunch. So Stuart not mincing his words there. And I actually shared this story on LinkedIn and got quite a few comments from dealers supporting, from the franchise and independent sectors, supporting what Stuart's saying here.
Yeah, I mean, we talked about it on last week's podcast. I mean, stock is everything at the minute. You know, we through Mannheim and the Cox Automotive data, you know, the mileage is increasing, age is increasing, the number of vehicles coming back into the wholesale sector is reducing, and it's because one of the shortages at the front end, but as Stuart has pointed out there, you know, retaining more stock for retail. And holding on to more vehicles. So again, very on point, and as you say, lovely statement there. And I saw you jump straight on that one when you saw it published in his LinkedIn profile this week.
Yeah, indeed. Now, next story is from AM Online, and it's dealers risk losing referrals from online customers, warns Judge Service. So this is based on a release that I helped the guys at Judge Service with, and it's based on research they did of, well, it's over 30,000 car buyers who have made a purchase within the last 12 months, and it identified the top 10 reasons customers choose the dealer that they actually purchased from, and most importantly, how likely they were to become promoters of the business. So this is actually recommending the business to friends, family, on social media. And the research covered that period from January during lockdown and ran through to May after showrooms reopened. And there's some interesting stats here. There is a top 10, but maybe if we focus, we'll focus on the top 5. So the question that customers were asked was, on this occasion, what made you visit the dealer you bought from? So number 5 was, I drive past them every day. Number 4, I saw a TV advert for them. Number 3, I had my last car serviced there. Number 2, I was recommended by friends and family. And number 1, I had a good experience in the past. So that top 5 is really based around that familiarity and recommendations. And what Judge Service is saying in this story is that if customers do find you online, then maybe you need to work just a little harder at sort of nurturing that relationship and getting them to retain their customers, their custom, and also for them to start recommending you.
No, and it is, I mean, it's a very good point, and I know many dealers have been working on that continuously, and probably the pandemic has sort of forced many of them into doing that, isn't it? They're having fewer face-to-faces because it's in that online environment. And as you know, we interviewed Robin Luscombe and his son Sam, that the consumer is now in full control online. They can just, if they're not happy, they'll click on and they'll go somewhere else. So that engagement and that continual engagement is key. And the dealer network is working hard, but it's got to be more challenging, hasn't it? Because you've got to get that messaging across and that engagement with the consumer all the time. And interesting where the interview with Andy Barratt, that customer experience is key, isn't it? And he talks about that in the interview with him.
Yeah, and in fact, Neil Adley, MD of Judge Service, makes a good point in the story, because he says the old adage that people don't just buy cars, they buy people resonates more than ever following the lockdowns. Relationships with new customers need to be nurtured, whether it's face-to-face in the showroom or via the Zoom and Teams meetings, which will have become an important part of the transacting process. So it's all about building that relationship.
It is, definitely.
So you're listening to All the Chatter That Matters on Motor Trade Radio, brought to you in association with eBay Motors Group. This is your weekly one-stop shop for all the biggest car retailing headlines, and available on demand wherever you are on your podcast feed.
So next up, we've got an extract from our exclusive interview with Andy Barratt, who, as we say, ex-MD of Ford of Britain until October of last year, and now MD of Lexus and Toyota at Al Futtaim in the UAE.
Now, Andy, you mentioned something that quite interested me about the Lexus showroom experience being akin to a boutique. So I'm kind of curious, would our listeners, especially those Toyota and Lexus dealers who are listening in, would they recognize your sites? And also, are OEM CIs less evident in the UAE?
Great question. I think if you look at Lexus, they do have a global CI. So actually, when you look at a Lexus, whether it's a boutique or a slightly bigger store, and we have one very big store, which is like a premium 5-star hotel in the service reception alone, they are a premium standard, but they are around the world. So I think a Lexus dealer would recognize attributes of Lexus in any showroom wherever they go. But, for me, coming from a volume manufacturer into what was a premium manufacturer at that point, because I started initially with Lexus before I took Toyota on, it was all about the guest experience. And, I was fascinated by the attention to detail and how I could improve that. And we're really lucky because the Intercontinental Hotel in parts of Dubai are part of Alpha Tame. So I spent time with their management looking at what makes the difference between a standard experience and a truly premium one, and tried to apply that back from, the aroma that you inject into the showroom, the flowers on front desk, or the way you are greeted, because every showroom has greeters in Lexus. So it was interesting, but I genuinely think that the Lexus standard is so high around the world that actually you get a similar experience. But CIs are different. When you're a distributor, you have a little bit more flexibility. But I think in our case, what it means is that we probably exceed them by some significant distance because, we've invested in truly world-class operations. Some of them are very large, some are not so large, but they're all of a truly, truly very high standard. And I think that ensures that we give customers a really good experience, but also makes it a great place for our employees to work, and that's super important.
Well, what a great interview. I mean, that's just a snippet. That's just a little teaser. But we do urge you to look out for that on Wednesday when it's uploaded and shared.
Definitely. So moving on to the subject of the moment is agency model on the radar for Nissan, and this is a story in motortrader.com, and this has come from their managing director of Great Britain, Andrew Humberstone, has not ruled out agency model for the UK dealer network. So again, another intention from an OEM around agency and distribution modeling.
Yeah, it's an interesting story, this, because I guess the assumption is, certainly, me with my journalist hat on, the assumption is that for the OEMs, this is front and foremost, this is all they're thinking about at the moment. But Andrew makes the point that, it's a consideration. It's not the most important thing they're thinking about, but it's certainly on the radar. And he points out, he makes a really good point about, it's the cost implication that this is what's driving the agency model, because it's OEMs trying to take cost out of the equation. And this is something I know we've talked about before. And, certainly with the move towards EV, the OEMs are facing additional costs, R&D costs, the cost of bringing new vehicles, new tech to market, and they've got to take cost out somewhere. So they are looking at distribution, which is why the agency model is becoming such a talking point amongst some of the OEMs.
Yeah, and again, it is moving at a very, very swift pace, this now, isn't it? The conversation's taking place. And I think we discussed it the other week. I think that it isn't for everybody. And it isn't a black and white. It isn't either agency model or non-agency model. There will be a hybrid somewhere in the middle of all this because of costs, because of financial capabilities that vary so much from one OEM to another. And as you say, that distribution model of getting those vehicles into either the UK or the European markets, and to add to that, everything that's going on within the electric market around EVs and things like this. So there's a lot for the manufacturers trying to work their way through, and it's but the intention is there now. There's a lot more manufacturers and OEMs now starting to talk about agency and distribution now, more than ever. So we will see what happens.
And you know what, I think that's the absolute key. It is OEMs talking about it, because previously these would have been discussions behind closed doors, but now they're much more open.
Definitely. So we're back over to AM online, and this is, I know we talk about it every month, don't we, when we get the SMMT new vehicle registrations around that, what's happening in the fuel type market. But this is used market sees growth in demand for hybrids, which we were talking before the show, because you kind of, you're thinking about, are hybrids the stopgap? We know that in the new vehicle market, hybrid as a sort of an alternative fuel has started to ease, and fully battery electric vehicles has then started to take over. But I think one thing in this story, it doesn't really clarify, does it, whether it's a plug-in hybrid, whether it's a self-generating hybrid, petrol diesel hybrid. It's very very sort of diverse now when you start just generalizing hybrids.
Yeah, it's no longer clearly defined.
No.
When hybrids first came onto the market, it was just a petrol and electric car, and yet with diesel coming on as well. But now there's so many varieties. So when the term hybrid is used, you don't actually know if it means pure hybrid, plug-in hybrids, whatever. But this particular story, it says sales of used hybrids models grew by 8% in May. That was the same rate as petrols, while the stock turn of hybrids was actually up 24% in the same month. So it'll be fascinating to hear from any listeners to see if that's actually being replicated across their businesses on their forecourts, and what customers are actually asking for.
I mean, they do make a point there as well, don't they, that diesel models saw the largest growth with a 10% uplift in sales. Now, I've had a conversation today before the podcast that what will it look like going forward when this move towards electrification has happened in the new vehicle market, whether that's 2025, 2030, 2035, and the choice of either hybrids or diesel or petrol isn't available. What will that used market look like for those that still want to drive a diesel or a petrol or a hybrid because they don't feel that the infrastructure is ready for them, or their driving behaviours don't relate to an electric vehicle, and they're still doing 40,000 miles plus? Where will that demand be, and where will those prices for those vehicles in the used vehicle park start to position themselves? It's quite an interesting one, the way this could go.
It is, yeah, and also long term, how much will they be penalised for driving diesel? So there's lots to play out there.
So the final story, actually, we have got a solution to this. Actually,
we have.
There is a solution now. If anybody's been following any of Curtis or mine Twitter and Facebook activity in the recent week or so, and we've been talking about the classic cars, the Hillman Imp. We mentioned about if anybody can find an electric Hillman Imp. Well, actually, This Is Money has come up with a solution. Would you convert a classic car into an electric vehicle? Demand has soared as this Welsh firm and new rivals are emerging, but it's not cheap, they do point out. So you can get your classic car. If you have an Hillman Imp, you can do that as well. David Billsby listening to the show this morning. I don't think he'll be getting his scooter converted anytime soon to an electric scooter. But yeah, you can get your vehicle converted if you like.
Yeah, it's an interesting story, this, because it looks at two different companies. There's electric classic cars in Wales who have converted around 100 cars to date, And they actually say that they've seen demand go through the roof. And it's quite interesting. It's their customers are diverse, because they've said they've had inquiries from everyone from school teachers to millionaires. And the sort of vehicles they're converting: classic minis, Land Rovers. It really is across the board. And there's another company featured in this story called the London Electric Cars, and they say they charge anything from £25,000 for a conversion. So that gives you a ballpark figure for how much it will cost. But some of the vehicles that they've been converting, are quite extraordinary. And so this does follow on from exactly what we were talking about last week, because where they're able to do this by using old electric motors from Nissan Leafs and Teslas. So these are vehicles that have been written off, and they're recycling. So there is actually a recycling story to be told here as well.
Yeah, no, it's great. I mean, I've watched some of these. That I've seen the London company a couple of times on TV with what they do. There's another program that does follow these sort of classic car conversions into electric vehicles. I've seen even things like the E-Type Jags being converted into an electric vehicle. So you can see where there is a market for it. And again, I suppose the question is £25,000 cheap or expensive? I suppose it very much depends on what you're converting. I'm not sure whether when we do find your Hillman Imp, Curtis, whether you'd want to spend £25,000 in converting a Hillman Imp. But if you did have a classic E-Type Jag and you wanted it to be an electric vehicle, then you know what, £25,000 probably isn't that much of an investment into that. But again, you can see this starting to happen a lot more, can't you? Because as we were just talking about in the last story, what will people start to get penalised in time for driving around in those petrol and diesel models, and especially the older ones like the classic cars that potentially will be polluting. It's going to be an interesting dynamic, this one.
Yeah, and they do point out that the company in Wales, Electric Cars in Wales, they actually converted a Volkswagen camper van for Ellie Goulding, which was all part of her wedding present for her husband, and they're currently converting a Fiat 500 for the actor Dev Patel. So they only need to sell a couple of those to some high-profile customers, and word does get around.
And they're talking about selling these conversion kits around the UK, but also buyers in the US, Canada, Australia, and South Africa. So again, huge demand for that by the looks of it, and we'll keep an eye on this one definitely. Yeah. When you get your imp there, Curtis, you'll be all right. Yeah.
Well, it goes back to my original point about getting some crowdfunding. So we'll find the imp, we'll sort out some crowdfunding, and we'll be sorted.
Alan has got to look out for it. I think he's frantically looking for that Hillman imp for you.
So that's all for now. You've been listening to the weekly Motor Trade Radio podcast, brought to you in association with eBay Motors Group. Thanks for joining us for all the chat that matters. We're back next weekend with our take on the latest car retailing headlines, even from across the media. And do listen out for that. Do watch out for that interview with Andy Barratt that'll appear midweek. Until then, it's goodbye from me.
And it's goodbye from him.